Welcome you. So, you're here because you want to get smart on something specific, but maybe without getting totally bogged down in, endless reading.
We get it. Information overload is real.
Exactly. So today we're heading to Thailand. Specifically, we're looking at Chiang Mai and this idea of investing in a condo near Chiang Mai University.
Interesting niche.
Yeah, and we've been digging into a blog post that gives some real insider perspective on this market. It's actually from Ocean Worldwide. They're a luxury real estate agency based down in Phuket since like 2004.
Okay. So they know the Thai market, even if their main focus is luxury spots like Phuket and Koh Samui. Sandra O'Neill, the director there, has seen a lot over the years.
Right. So our mission today is pretty straightforward. Give you the key things to think about if this kind of investment is on your radar. We'll look at the potential upsides, definitely, but also the really crucial challenges.
The need to know stuff.
For sure. I mean, international real estate, it's always fascinating, isn't it? So let's dive in.
Sounds good. And at Chiang Mai, it's important to remember it has its own flavor, its own market dynamics compared to, say, Bangkok or Phuket.
Okay, let's unpack that. The Ocean Worldwide Post really highlighted Chiang Mai's affordability as a big plus, especially next to Bangkok. Seems like your money goes further.
Generally, yes. That tends to be the case.
But it also pointed out it's not like one single picture. Overall growth has been steady, sure, but mid-range condos, they apparently saw a bit of a dip recently. Whereas the higher-end places like 7 million baht and up, they actually grew over 10% last year. That's quite a split.
It is. It shows segmentation. You can't just say Chiang Mai market.
Yeah.
And putting it in context, Bangkok is, the big engine, fast-paced, expensive, capital city vibes.
Right.
Phuket, where Ocean Worldwide focuses its luxury lens, that's driven heavily by tourism, beach appeal, which can mean, well, more volatility sometimes. Chiang Mai offers something different. People often go there for maybe peace, tranquility. And that often translates into a property market with maybe steadier, if less dramatic, growth patterns.
That makes sense. A different appeal attracts a different market speed. So what's actually driving the growth there? The blog post, drawing on Sandra O'Neill's experience, I guess, pointed to a few things. Tourism, obviously.
Always a factor in Thailand. More tourists mean more demand for rentals.
Yeah. And then the expat community, retirees, digital nomads flocking there. That must boost rentals too.
Definitely. It's become a real hub for digital nomads. Good infrastructure, lower cost of living than many places.
And they mentioned infrastructure improvements generally, plus the overall Thai economy
Yeah.
and foreign buyer interest playing a part too.
Exactly. And it's how these things work together, The rising popularity of tourists and expats and nomads. It all feeds into demand. Plus, better roads, maybe better connections, just make it more attractive overall.
Okay, so let's zoom in on the university angle. Why invest near Chiang Mai University specifically? The post suggested this was almost a no-brainer.
Well, the logic is pretty sound.
Yeah, you've got this huge institution right there. That means a constant stream of people needing housing students, faculty, staff.
Right, a consistent demand pool.
So logically, finding tenants should be easier. And maybe you can get slightly better rental rates. Plus, university areas tend to be pretty vibrant, lots of cafes, shops, things younger people like.
That's a really key point. Investing near a stable anchor like a major university brings a certain resilience. The demand isn't just tied to tourism swings, for example.
Good point.
And think about the sheer number of potential renters.
Right.
On-campus housing is often limited, right? So loads of students, international students especially, and faculty need places nearby. And like you said, the whole area tends to develop amenities that cater to them.
The blog post also talked about capital appreciation potential near the uni. The idea being, as the university grows, the area around it develops, infrastructure gets better. Property values should go up over time.
That's the long-term play, yeah.
They even name-dropped the Base Heights condo as an example, saying it offered competitive prices in a good spot.
And that potential for capital growth is crucial. I mean, what drives property values up? Usually it's rising demand, maybe limited supply, and improvements in the area, university expansion, new shops, better transport. It all makes a place more desirable.
So it's not just about the monthly rent check.
Exactly. And an investment that pencils out okay on rent today could look even better down the line if the value climbs.
Okay, sounds promising. But we need to talk about the hurdles, especially for non-Thais. The Ocean Worldwide post was pretty clear. There are definitely things foreigners need to know before jumping in.
Absolutely. The legal side is critical. The big one is the difference between owning a condo and owning land. Foreigners can own condos right under the Condominium Act. But, and this is key, there's a limit. Foreigners collectively can't own more than 49% of the total unit space in any single condo building.
Okay, that 49% foreign quota, that's a major practical thing to track if you're buying. You might need to be quick in popular buildings, I suppose.
It can influence things, yeah. And then buying a house with land, that's much trickier for foreigners. The Post mentioned it usually involves long-term leases, like up to 30 years, rather than owning the land freehold.
So leasehold versus freehold.
Yeah.
Big difference in terms of long-term security and what you actually own.
A huge difference. And it's important to understand why these rules exist in Thai law. Leasehold gives you usage rights for a long time, but it's not the same as owning the land itself. Foreign investors really need to grasp that distinction.
And the buying process itself. The Ocean Worldwide Post laid out the steps. Due diligence, and they stressed getting a lawyer for this.
Essential. Cannot stress that enough.
Then a reservation agreement with a deposit, the main sales and purchase agreement, the detailed contract, and finally, the ownership transfer at the land department with all the paperwork and fees and taxes. Sounds like you need to be on the ball.
You do, and that due diligence step is paramount. A good lawyer who knows Thai property law isn't just helpful, they're your safeguard. They check the title, vet the contract, guide you through the land department stuff. It prevents so many potential headaches.
And it's not just the purchase, right? The Post mentioned ongoing rules, like needing to register a lease if you rent your condo out for more than 3 years.
Local regulations matter.
Plus, being aware of taxes, purchase tax, stamp duty, adds to the overall cost.
Exactly. Managing an investment means knowing and following the rules. Registering leases protects both you and the tenant. Budgeting for taxes is just basic responsible investing.
Okay, let's talk income. Rental yields.
Yeah.
What can you realistically expect near the university? The Ocean Worldwide Post mentioned good long-term potential from students, expats, locals, and said furnished places near amenities are popular.
That makes sense. The uni crowd creates a stable, long-term rental market there. And yeah, furnished is often preferred students, faculty moving in. They don't want the hassle or cost of buying furniture. Convenience is key.
The Post also touched on the short-term market, obviously driven by tourism. Potential for higher income in peak season using platforms like Airbnb.
Yep, the usual short-term rental story.
But also more competition and needing to know the local rules and taxes for that kind of rental. Sounds like more hands-on management.
It absolutely is. Short-term can bring higher nightly rates, especially when tourism is booming, but you're dealing with constant turnover, cleaning, guest communication. Plus, short-term rental regulations can be tricky and change. Need to stay updated.
So the bottom line, what are average yields like? The Ocean Worldwide Post gave a range, 4% to 8% gross, but stressed that net yield after all costs is lower.
Right, and those are just averages. Huge disclaimer needed there.
Yeah, they emphasize that too. It varies massively based on the exact location, the building, how well you manage it.
Precisely. Averages are a starting point, but you need to analyze a specific property. Its condition, its amenities, exactly how close it is to the Unigate or the cool cafes. That all impacts rent. And yeah, factor in vacancies, repairs, management fees to get your real net return.
Got it. Okay. Costs. Beyond the headline purchase price, the Ocean Worldwide Post hammered this home. Understand the full picture. Average prices per square meter vary a lot too, right? Depending on location, building age, facilities.
Hugely. You can find more basic, older units, and then you have brand new luxury condos. The price per square meter helps compare, but yeah, there's a wide range in Chiang Mai.
Right.
It's generally less than Bangkok, as we said, but prime spots will still cost.
And then all the other costs the Post listed. Transfer fees, stamp duty, your lawyer's fees, the sinking fund for major building repairs down the line, and the regular monthly maintenance fees for cleaning, security, pool upkeep, whatever. They add up.
They absolutely do. You have to budget for these. Transfer fees and stamp duty are government charges. Legal fees are for your protection. The sinking fund is crucial for the building's long-term health. Maintenance fees cover the day-to-day. Ignoring these means a nasty surprise later.
What about financing for foreigners? The Post said mortgages from Thai banks might be possible, but often need good credit, proof of income. Sounds tough.
It can be challenging, yes. Banks are often more cautious with non-residents.
They mentioned some developers offer their own financing. Maybe easier to get, but potentially higher interest rates.
That's a common option. Developer finance can be more accessible, but you need to compare the rates carefully. It might cost you more in the long run than a bank loan, if you can even get one. Personal loans were mentioned too, but probably not ideal rates.
So really need to shop around for finance options, assuming you need it.
Definitely explore everything and weigh the total cost.
Right. Location deep dive. Where specifically near the uni did the Ocean Worldwide Post suggest looking? They mentioned Nimmenhamen Road. Popular, trendy, but pricier.
The Nimmen area, yeah. Very desirable. Lots of cafes, boutiques close to the uni. But you pay a premium for that buzz.
Then Santatham. More local feel, laid back, maybe more affordable.
Yes, Santatham offers more of a local neighborhood vibe, often better value. Maybe slightly less convenient for some transport links, but still close.
And areas near Canal Road. Quieter, maybe bigger condos.
Generally, yeah. Bit more suburban feel, can find larger units, but further from the immediate unibuzz. Depends what your target renter wants.
And accessibility seems key, especially for students. The Post mentioned being near public transport, like the song that hears those red truck taxi things.
Crucial. Easy, cheap transport is a big plus for students. Proximity to campus, obviously, but also easy access to town, maybe the airport if you're thinking broader appeal.
Yeah, airport access was mentioned too. And the Post advised keeping an eye on future developments, new malls, road upgrades, university expansion plans, stuff that could boost value later.
Smart investing means looking ahead. New infrastructure, new amenities nearby that can significantly lift an area's appeal and value. Doing that homework is important. They even included a little comparison table in the Post, didn't they? Pros and cons of those areas.
Yeah, amenities, price, transport, vibe, really handy quick reference.
Helps visualize the trade-offs.
Okay, let's talk tourism's impact. The Ocean Worldwide blog post noted tourism in Chiang Mai is growing, attracting all sorts of visitors. And this obviously fuels demand for accommodation.
It does. Chiang Mai gets backpackers, culture seekers, long-stay nomads, more traditional tourists. This mix shapes the demand for different kinds of rentals, and ongoing infrastructure improvements aim to attract even more.
The Post also highlighted the seasonality. High season, roughly November to February, then the rainy low season. That matters a lot for short-term rentals, right? Affects occupancy, prices.
Absolutely critical for short-term lets. You'll likely have lower occupancy and need to drop prices in the low season. You have to budget for that fluctuation. It's not consistent year-round income like a long-term lease might be.
And like we touched on, more tourism means higher rental potential in popular spots, especially short-term during peak times, but also more competition. Long-term might be more stable, less management hassle, but maybe lower peak returns.
That's the core trade-off. Short-term offers potentially higher yield, but needs more work and is tourism dependent. Long-term offers stability, but maybe a lower ceiling on returns. The Post gave some average rent examples for studios, one-beds, even houses, which helps paint a picture.
Yeah, useful benchmarks. Which leads us right into comparing long-term versus short-term strategies directly. The Ocean Worldwide Post laid out the pros and cons. Long-term, consistent income, less hassle maybe, but lower yields, potential for longer gaps between tenants.
Right, your bread and butter, steady income stream.
Short-term, higher income potential, flexibility to use the place yourself sometimes, but way more management effort, very dependent on tourism swings.
Exactly. Higher risk, potentially higher reward, much more hands-on. And the choice isn't always obvious. It depends on the property's location, your target renter, how much time you want to spend managing it.
The Post really stressed looking at current market conditions, watching new developments, and crucially, knowing your target renter. Student, tourist, nomad, and making sure your condo fits what they need.
Tailoring the property is key. Students might prioritize proximity and value. Tourists might want nicer furnishings and easy access to attractions. Nomads need good Wi-Fi and maybe a workspace.
And they gave that heads up about potential changes to short-term rental rules again. Need to keep an ear to the ground on that. Plus another comparison table summing it all up, yields, effort, risk, etc.
Staying informed on regulations is non-negotiable, especially in the short-term space. It can change. And yeah, knowing your tenant profile inside out helps maximize occupancy and rent, whichever strategy you choose.
Okay, let's circle back hard on the legal stuff for foreigners.
Yeah.
The Ocean Worldwide Post went deeper here. Reiterated the Condominium Act, the 49% foreign ownership limit. We got that.
Foundational rule for condo buyers.
But it also clarified other options, like leasehold those long-term leases instead of ownership. And the more complex route of setting up a Thai company to potentially own land, but underlined heavily. Get expert legal advice for that.
Extremely complex, that company route. Not for the faint of heart or thin of wallet, and needs top-tier legal guidance.
And it flat out stated again, landed houses, plots of land. generally reserved for Thai citizens to own directly freehold.
That's the bottom line on land. So for most foreign buyers thinking of houses, leasehold is the practical reality. Understanding these structures fully before you commit is vital. Avoids nasty surprises.
The Post really drove home the need for lawyers specializing in this exact thing: foreign property ownership in Thailand. Their role in due diligence, checking contracts, navigating Thai law.
It's not just checking paperwork, it's understanding the nuances, the potential pitfalls specific to foreign buyers within the Thai system.
Yeah, they basically said,
Yeah,
don't see legal fees as a cost to cut. See it as essential protection for your investment.
absolutely. Best money you can spend in this process. A good lawyer saves you potential heartache and financial loss many times over. It provides peace of mind.
Okay, looking ahead, what did the Ocean Worldwide Post predict for Chiang Mai's real estate future? Sounds like moderate growth, citing infrastructure improvements, the digital nomad scene, but cautioning against expecting, like, explosive price jumps.
A measured outlook, which sounds realistic. Chiang Mai has solid fundamentals, the university, its lifestyle appeal, improving infrastructure, that supports steady growth. But yeah, it's probably not going to be a get-rich-quick market. Broader economic factors always play a role, too.
The Post also spotted some emerging trends in development there. More focus on sustainable building, smart home tech creeping in.
Reflects global trends, doesn't it?
Yeah. And mixed-use projects combining apartments with shops or offices, and even properties designed for an aging population. Sounds like the market's evolving.
Developers are adapting to changing demands, environmental awareness, tech convenience, demographic shifts. Could create some interesting niche opportunities for investors who spot those trends early. Mentioned Bangkok's active growth, too, just as a comparison point, I think.
Right. Lastly, the Post had some really solid, practical tips for first-time condo buyers. What to look for: location, access, structural soundness, layout.
Yeah.
Emphasized doing a thorough inspection.
Due diligence 101. Don't fall in love with the view and ignore the leaky plumbing.
Totally. And it warned about common pitfalls: overlooking the fine print, maintenance fees, condo rules,
Yeah.
not researching the developer's reputation properly,
Huge one. Check their track record.
underestimating upkeep costs,
Yeah.
and being wary of deals that seem way too good to be true.
If it looks too good, it probably is.
Yeah.
Trust your gut. Do your homework.
And advice on working with agents: check their experience, agree on commission up front, make sure they explain everything, clear the process, the local rules. But ultimately, do your own independent research too.
Excellent advice. Agents can be helpful, especially local ones, but they work on commission. Verify everything yourself. Understand what services they offer for their fee viewings, negotiation, paperwork help. Be an informed buyer.
So wrapping it all up, investing in a condo near Chiang Mai University,
Yeah.
based on this Ocean Worldwide perspective, it seems like, well, an interesting option, doesn't it?
It does. It has clear potential.
More affordable than Bangkok. Solid rental demand baked in because of the university.
Right.
But, and it's a big but, the need for really thorough research is crystal clear, especially on the legal side for foreigners. Understand the market quirks, the costs, the challenges.
Absolutely. It's promising, yes. But success hinges on doing your homework meticulously, understand the rewards, but also understand the risks and complexities of investing overseas. Careful planning is key.
Perfectly put. Now, thinking about that balance, affordability, growth potential, the university anchor, and it kind of makes you wonder, doesn't it? What other emerging university towns around the world might offer similar investment dynamics? Something for you, the listener, to maybe explore further.
Interesting thought to leave people with.
Indeed. Well, thank you for joining us for this deep dive today.